The Bitcoin rally is simply not stopping. We're climbing from high after high, and we all know why this is. It's because of the Bitcoin ETF. The Bitcoin ETF is sucking up more and more supply. In this video, we are going to look at the actual data. We're not looking at headlines. We're going to look at on-chain metrics, how much supply is actually been sucked up. How much higher could we actually go? How sustainable is this rally, and when could this turn around? Now, what we've got over here is the Bitcoin inflation rate, and we are at currently 1.7% per annum. And in April of this year, this will drop to 0.85%. So for the price of Bitcoin to go up in real terms, completely independent of money supply, it has to grow in adoption by at least 0.85% per annum going forward. Will this happen? Probably, but let's look at more data. Thankfully, the blockchain is 100% transparent and we can see what's happening on chain. We can know how much is currently been held by the different Bitcoin ETFs. We started off before the ETF approval with 619,000 Bitcoin. The share of Grayscale has dropped since then because they have the highest management fee. The share of all the other ETFs went up. And so from the 10th of January to today, we went from 619,000 to now 737,000 Bitcoin held by all of those ETFs combined. So within a bit less than 2 months, we're seeing 118,000 Bitcoin moving to those ETFs. And as a fraction of all of Bitcoin that can ever be in circulation, that's 0.56%. Now, when we annualize this and when we just look at the past 14 days, we even get a higher number. We get 7.5%. So yes, the ETF demand more than scoops up all of the mined supply right now. This is a pretty constant trend. So let's say this number is stable and let's say 0.8% hits the market, and it's a bit under 7% per annum of the entire supply that gets moved into long-term storage in the ETFs. Because that's in the end the question, right? Who is buying those ETFs? What will be done with those ETFs? I believe that most of it is long-term holding, maybe by asset managers, maybe for retirement, maybe for long-term portfolio diversification. So I do not believe this number actually to go down, even if the price increases by Bitcoin quite a bit, and it might make sense to take profit. I don't think that the balances on those ETFs will drop. Now, here's a nice daily chart of how much dollar inflow there is into the Bitcoin ETFs. Most of the days we see inflows. Just at the end of January, we saw slight outflows, again out of Grayscale mainly. But since then, we have accumulation every day through Bitcoin ETFs. The winner in all of this is BlackRock. They've got the largest market share. After that comes Fidelity. So when we take that demand by the ETFs, we remove the mining from this, 7% per annum. Does this mean that that's the expected real return of Bitcoin? I'm not so sure. Because have a look at this. This is the HODL waves. This shows how much of all of Bitcoin hasn't moved for a certain time period. So over here, what we see, that's the Bitcoin that hasn't moved in the last 10 years. Very likely lost Bitcoin. Here we've got a combined line for the Bitcoin that hasn't moved in the last 7 years. This is also going constantly up in aggregate. Here is the line for the last 5 years. We do have our small little micro dips here, but still this is going up very long term. And let's just take the last 5 years, and this went from 20% to a bit over 30%. So roughly 2% of ownership gets lost every year, or at least doesn't move in aggregate anymore, right? It gets held and held by the diamond hands, potentially the people that can't sell anymore. Early buyers now will make millions. That's how you get clicks on YouTube, but that's not necessarily how you really make money. The way to make money with crypto is to be more skilled than others, to know more than others, to do blockchain analytics better than others. It's the boring technical content that doesn't do well on YouTube, but that forms skills and that I offer in the premium membership. So there's a lot of tutorials over there, how I approach analyses. And if you join, you also get direct access to me. You can ask me any questions and I reply as fast as I can. We are still below 100 people, so I do have enough time to reply everyone. Feel free to check it out. It's thebitcoinstrategy.com. So now we are moving from the 7% to already the 9% increase per annum. But what's driving the prices really, the US dollar prices long term? Why are stocks going up, say, by 8 to 9% per annum? Is this all real growth? The answer, of course, is no. There is inflation. There is more money printing. How much money printing? that much money printing. This is USM2 and this grows by roughly 6.5% per annum. So we are now at 9% plus 6.5%, 15.5% minimum return long term for Bitcoin if the ETF demand stays the way it is. Now this is again very bearish. Why is that? Now I believe that 15% per annum is still very pessimistic for Bitcoin long term, and that's because the price overreacts to demand overhangs, right? Because Bitcoin is illiquid and inelastic. For the prices to crash by 70 or 80% from the all-time high, it might only be 20% of all of Bitcoin that actually moved. So maybe what currently looks like 15% per annum could be double or triple of that long term even. Now here's a caveat to all of this. The 7.5% that's currently getting scooped up by the Bitcoin ETFs might decline because we simply see dollars getting into Bitcoin. If the Bitcoin price doubles, then this number might be cut in half. This number is independent of the price. It's unlikely to decelerate by a lot, but this number could definitely come down. The money supply in the end isn't that important. What really matters over the next 10, 20, 30 years is of course real purchasing power, not really the number, as in how many dollars is your Bitcoin worth. Because of the high price sensitivity to relatively low demand changes, I do believe that we will still continue to see boom and bust cycles in Bitcoin. I do believe that this is not just a smooth ride up from here. The easiest way to think about this is to compare this with property, right? Let's say you've got a street of 100 houses and houses don't trade every day, right? But you still compare house prices to figure out, is house A cheap or is house B cheap? Now imagine that suddenly something happened in the neighborhood, right? Let's say the factory shuts down and 3 or 4 houses need to get sold urgently because the family can't afford those houses anymore. They have to sell those houses for a low price, which then means that all the other houses on the street will also have a lower value, right? People compare prices. If all of the recent transactions happen for a lower price, then the entire market cap of all 100 houses goes down a lot. You don't need a lot of money changing hands for market caps to change massively. This is pretty much what's going on with Bitcoin, because most Bitcoin doesn't move and just a little bit of supply will create these massive price swings. The $100 million question is of course, where are we going to peak in this bull market? And there are lots of very fancy mathematical models. This is not a fancy model. This is just a randomly drawn curved line, or to be more exact, 2 randomly curved drawn lines that historically connected the tops relatively well and the bottoms relatively well. And this would be a comparatively pessimistic outlook. With that simple drawn line, we could already peak out at around $110,000 per Bitcoin. Could we break through this? Yes, of course. But so could things turn around and a crash to 27,000 could be on the card. Who knows? Bitcoin used to have, and I believe still will have, a lot of volatility in the future. What I like to look at is the value days destroyed. I like to look at what are long-term holders doing that usually do not move their Bitcoin. If the people that usually don't move their Bitcoin suddenly do when the price is elevated, then the hardest of the hard hands are selling. And do I want to be more diamond than the diamond hands? Probably not. When this is peaking, the value day is destroyed. This is when the price is very elevated. We can see several peaks in a single bull run, but in general, it makes sense to take some chips off the table whenever we are red. We are not yet red here. People aren't yet selling, at least at historical heights. So I believe we are still in a healthy bull run. Still, I will keep monitoring this very, very closely. And of course, I will keep you updated when things change. So in order not to miss that update, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you've got Telegram, feel free to join us. Link is down below.